Let's get some insights in the news shaping the markets. For that, we welcome in Kevin Mahn's with us, President, Chief Investment Officer, Henning & Walsh Asset Management. Thank you so much for being with us.
My
Look,
pleasure.
we had a great 23, 24. What about 25? How are you feeling?
Yeah, I think the initial stages of 2025 are providing a glimpse into what the year will look like overall for investors, Nicole. It's going to be more short-term bouts of volatility, more uncertainty, but ultimately more growth opportunities ahead. However, the overall stock market growth is likely to be much more muted than we saw in previous years. Here's a great stat for you. Going back to 1950, there have been 9 occasions where the stock market rallied by 20% or more in consecutive years, as we saw over the last 2 years. Good news is, 8 of the 9 times the market was higher the following years. Perhaps the bad news is, only by an average of 3.6%. So investors need to be a lot more selective in the new year to find those attractive pockets of growth opportunities.
So you still see the growth opportunities.
I do.
You still see, the movement, but maybe you won't see the biggest gains. For example, now on the S&P 500, would you be comfortable saying we could have a 10% year of gains?
I think that might be the high end, but I do think there are areas within the S&P 500 that might experience greater than 10% gains. And some of those areas involve market leadership changes. Yes, I still believe in the AI revolution. Yes, the semiconductors and chips in the Mag 7 are likely to still lead the way, but consider some of those other areas that around that. How about industrials like aerospace and defense? How about healthcare, but not necessarily large cap pharma, but small cap biotech? And we've seen a great start to this earnings season from the big banks, but we like regional banks even more as they continue to recover from the regional banking crisis of a couple years ago.
Yeah, I do want to get to your picks, and I see, for example, Axesome Therapeutics on there, so that would go to your point. But just quickly on the banks, I was just looking up KRE a moment ago, and it's down 1%. But the question that people had, the big banks have been coming in, they're doing well, and Bank of America comes in, much of the same. And that was the expectation. For example, Octavio Morenzi from Optimus was having this conversation with me yesterday after we saw the big banks doing well. He said, I expect that to continue. He said it's the regionals I'm watching, credit quality, commercial real estate exposure. If the KRE pulls back like it does today, it's down 1%. We'll still have more banks coming out. I mean, tomorrow we'll have more too. Your thoughts? Do you buy in there, or are you not necessarily waiting?
I think you look to allocate within there, not necessarily the overall KRE basket, but select regional banking companies that don't have large exposures to commercial real estate, that are still trading at attractive valuations, have strong balance sheets, and also pay an attractive dividend yield. One name that we like, Webster Financial. Dividend yield of nearly 3%, a PE of just 10. Headquartered in Stamford, Connecticut. They're in the right part of the country that's going to experience some strong economic growth over the upcoming years, and we think that's an attractive candidate.
WBS is right now at $57. What kind of upside do you see for this name?
It would really depend. I think they're more of a consolidation candidate, perhaps even an M&A target. And I think there's going to be a higher pace of M&A activity with these smaller cap regional banks in the new year, in addition to those smaller cap biotechs that I discussed earlier.
So you have Modine Manufacturing, Lockheed Martin, Axesome Therapeutics. Tell me about those names.
So let's start with Modine Manufacturing. That's part of the overall AI ecosystem. We do like Taiwan Semiconductor, as Jenny spoke about earlier, the largest dedicated chip foundry in the world with a 60% market share. But how about a company like Modine Manufacturing, an industrial company that supplies cooling solutions to data centers? Switch over to aerospace and defense. Let's look at the largest defense contractor in the world that just received an $11.8 billion contract from the U.S. Navy back in December 20th. That, of course, is Lockheed Martin. And then Axesome Therapeutics, a $4.2 billion small cap biotech company that's developing therapies for central nervous system disorders. I think they're a potential takeover candidate in 2025 as well.
Wow. I mean, when you have a takeover candidate, these things can move big time.
Yes, they can.
10, 20, 30, 50% sometimes.
Yes.
So certainly ones to watch there. As we see the administration coming in Monday, we'll have the changeover. This is a big deal, you know? How do you feel that it will be taken, received? I mean, we have the cabinet hearings now. Feeling pretty confident, or you see bumpy road for the near term?
Yeah, right now there's a tremendous amount of optimism about more economic growth ahead, but I think that needs to be tempered with what the Federal Reserve is telling us. Based upon their last summary of economic projections, they're forecasting economic growth to slow to just 2% this year and then stay at 2% all the way through the end of 2026. If, in fact, though, the economy continues to grow, albeit slower, inflation stays benign, as we got a couple of cool inflation prints recently, and the Federal Reserve continues to lower short-term interest rates, even if gradually, I think that provides a tailwind for the economy, and I think it provides a tailwind for both stocks and bonds.
So with the 10 ideas here for growth opportunities and things like that, 10 investment themes for 25. I mean, I don't expect you to memorize them, but when you look at that, you did have your picks that fit into that.
Yes.
And the bull market, that continues for the AI investing. You had the Modine, the defense, you had Lockheed.
Yes.
The Fed adopts more gradual pace. What, 1, 2?
2 this year, 25 basis points
do
this
think
year.
2?
Yes, that's based upon their forecast, not my own, but I think it sounds, right as of now, pretty accurate.
Right, you had the pharma, large cap pharma turns to small cap biotech, and you talked about AXSM there. Muni's poised to perform.
Yes.
How so?
So I believe municipal bonds are priced very attractively right now. High net worth investors will continue to look for in demand tax-free income, and the supply-demand imbalance that still continues for municipal bonds will likely support higher prices in the future, coupled with very attractive tax equivalent yields.
All right, and preferreds benefit from financial rebounds and lower rates.
Yes.
That's obvious, right? I mean,
Ties
it
right
is
into
what
the
you're
regional
saying
banks.
and typing. Look to sources of power to help power your returns. Tell me about that.
Oh yeah, so think about the power solutions that are necessary to power all these data centers. It's forecasted right now that data centers alone will draw down up to 10% of our country's electricity grid by the end of this decade. If that's the case, we're going to have to look at alternative sources of power, like natural gas and like nuclear energy. So those are opportunities that we see for investors.
And don't abandon stocks?
Don't abandon stocks. Absolutely not. I think there's more room to run with this bull market, but there's going to be more volatility as well. So diversify your portfolio accordingly.
All right, Kevin. Nice to see you.
You as
Kevin
well,
Mahn,
Nicole.
President, Chief Investment Officer at Hennian & Walsh Asset Management. Thanks for being here.